Good afternoon, everyone, and welcome to Strathmore University Business School. I see we have quite a number of us from all over Africa. My name is Raymond Mutura. I am the Academic Director of our Family Business Executive Program, and also passionate about research and development in family businesses. What do we know about family businesses? We know that there are many, and there are many in Kenya and in Africa. We are very proud of this, I'm sure. But we also know that many more people are looking into entrepreneurship and specifically family enterprises or businesses. But the critical question that lingers in many family business owners is, what is the future of our family business, especially around succession? And occasionally, many family business owners or upcoming ones also forget to ask the question, and what is the business of the future? Yeah, the professionalism that is needed, the entrepreneurship that needs to continue with new generations, among other pertinent questions. We also know that family businesses are unique because of the fact that on one hand, it is a business, meaning it follows the rules of business, with a key one being coming up with good products or services, as we've seen with the Maridadi motors there, always with the aim of profit. But critical is that it is also a family, meaning that unlike non-family businesses, the interplay of non-economic factors that are termed socio-emotional wealth in family business research play a significant role in the dynamics of family businesses. We here at Strathmore want to continuously work with family businesses in our country and the region in realizing the benefits of this paradox. We do this through family business executive programs, research and consultancy, and through such educative forums, webinars, with those involved in running family businesses in our region. So I welcome you to this webinar focused on professionalizing family business operations. With me, we are honored to have a very distinguished panel of those that have run successful family businesses or consulted in them to navigate the paradox, the future of the business and the business of the future, among other concerns. So I'm going to introduce the panel. The first person is Mr. James Mwangi. James Mwangi is a managing director and also an owner of Enashipai Resort and Spa in Naivasha. And he is a second generation family business member. Welcome, James. You can wave to the people. Okay. Then we also have Mr. Adil Popat, who is the group executive chairman of Simba Corporation. Mr. Adil. And then we also have, good afternoon, Mr. Adil. Then we have Winnie Wamboi Maingi, who is an estate planner in ICEA Lion Trust Company Limited. Winnie.
Hello, everyone. Good afternoon.
Okay. And then also we have Mr. Ronald Bosi, who is a group managing partner at Ronald's LLP. Mr. Roland. Okay, fantastic. So we're going to begin the session by inviting Mr. James Mwangi to give us a keynote on what it means to be a giving us a second generation perspective on professionalization of a Kenyan East African family business operation. Mr. James, as I've mentioned, is the managing director of Enashipai Resort, and also he's part of the ownership of that business. James, karibu sana.
Asante sana, Raymond. Thank you very much. James Mwangi. And as Raymond has mentioned, I'm a second generation business member, and I'll be talking today on the importance of professionalizing family businesses. Share my screen. Okay, I guess we'll start off with what a family business is. And I think quite simply, a family business is an activity that is owned or managed by, actively owned or managed by one or more members of the same family. Typically, they tend to be from the same nuclear family, but sometimes they could be extended from extended members of the family. Today, we'll be going through a few things on why it's important to professionalize our family businesses, and what exactly that means, and a little bit towards the end on how exactly we do that. So why should we professionalize family businesses? I think really at the end of it all, the main reason why families and family businesses tend to professionalize is they really want to make sure that the businesses are going to be able to thrive and are going to be able to survive really beyond either the founder or the first generation. So what they're really seeking for is some sort of sustainability out there. And this being a family business, family and business kind of go together. As much as you're out there trying to get a successful business, you shouldn't forget that you also need to make sure that you're a successful family, because if the family is not cohesive, if the family is not together, then that obviously means that the business itself will have lots of problems. So another good reason is just to ensure that through the family is able to professionalize their activities, they're able to professionalize their business, they're able to get some sort of clarity on exactly who does what and how that is done. Another reason why I think families ought to professionalize their businesses, it also helps with communication. And this communication really is around communication to other stakeholders. If the family is professional, then they are able to identify key tasks, able to identify key roles that can then be delegated to the right people. And in some cases where you have stakeholders such as employees, I think the more we professionalize our businesses, then the better environment we give them to be able to feel at home, to be able to also be the best that they can, and just to ensure that obviously we're in a situation where the family is able to articulate its vision and mission and core values to everybody that is there. So what does it take to professionalize your business? I think quite simply what this means is really setting up systems to be able to improve your governance and performance. And by performance, I mean your financial performance, or performance in any other area that is there. So obviously this means having some sort of way to do that. From a family business perspective, I think one of the key things is to have a strong foundation as a family, where obviously you have shared values and goals. Because without that strong foundation, then obviously that obviously impacts the business in terms of increased conflict, in terms of just being a bit scattered and not knowing what needs to happen. It also involves some sort of documentation and regular application of procedures. And by that, that's really the standard operating procedures that we go by, and best practices. Family business, like all other businesses, have a lot to learn from each other and the world around them, and they should take that opportunity to be able to document some of these so that other people are able to be as productive. It also involves formalization of structures, and they could be as basic as a letter of appointment for members of staff. And the members of staff here can be family members, can be non-family members. So I think you definitely need a situation where, if it's your HR manager, if it's your general manager, if it's your finance manager or your sales manager, or a sales executive, or whatever position they may have, then they definitely need to have some sort of legal documentation around them. And for those who have been able to expand maybe their oversight beyond the family members as directors, and have outside directors as well as family members, I think it's also important for them to get proper letters of appointment with proper job descriptions. The entity, in this case, the business, needs to be able to be engaged in drafting their mission and vision and being able to properly articulate it. And lastly, it also might mean that the organization itself starts institutionalizing its activities. And this could be simple things like, staff and departmental meetings. Every month, your company is going to have a meeting. And what happens in the meeting, the minutes are taken, the minutes are shared, they're followed through. It could mean, every month or every quarter you have some sort of reporting procedure that you go through. Could mean that depending on the level of the business, you have some sort of internal audit, you have staff appraisals, you have statutory reporting, and of course, the more complex they get, you could go into things like tax compliance. So as we start institutionalizing some of these activities, then you find that the family business is well on its way to getting that professional outlook, and hopefully by that process then make them more sustainable. So how exactly does this happen? And obviously, I'm probably want to share a perspective from a second generation family member transfer. There are families that are probably still in their first generation, or you might even have some complex ones which are probably in their third or fourth or fifth. In our particular case, at least in my case and our family's case, this process of professionalizing our family business started even before our founder, who was our dad, passed on. And what we've done after that is really to continue to make sure that as a family that we've got what it takes and are able to deepen that process. So this professionalization is really a process, and it's a continuous process. It's not something you do today and you're done tomorrow. It's a process, and from a family business perspective, it really starts with identifying your family's common values and goals. In a case like ours, it took probably for the second generation to come up, to actively sit down and write down what our values and goals are. We've always had values and goals, but everybody thought they knew them. So this was obviously a good step for us to sit back and actually think through and figure out, what are our values, what are our goals, what do we do going forward, write them down. And of course, in that process, create an environment that allows everybody to be heard, to share their ideas, so that at least the discussions are able to be fruitful. We've had to strengthen our communication and our conflict resolution skills. So in as much as we were trying to professionalize the business, we spent a lot of time and continue to do in ensuring that, at least in our case, that the family is strong enough to be able to have other people and ourselves manage these businesses. I think a key part of it also is assessing the competencies that exist within the family. You might have several siblings, you might have, maybe a parent or both parents, you might have other extended family members that are working within your organization. So I think at some point, just assessing, what are our strengths collectively, who is good in what, and making sure that we're able to align people in the right roles will definitely go a long way in ensuring that that happens. It also takes a lot of persistence in terms of being able to prioritize things like education. And when you're talking about education, you're talking about educating, both the current and future generations and decision makers in the company. So you might find that, in some cases you have, older parents or grandparents And it's good that, through this education process, that everybody is able to participate, everybody is able to hear the same things. In our case, what it took was for our family to attend the Strathmore Family Business Program, which was really the catalyst and what sparked the process of us starting this process of professionalizing our family business and really making this a strong family and hopefully a stronger business in the future. And it obviously culminates in some sort of formalization of all these discussions that you've been having. You get to what's called a family constitution, which is really a formal document that's made by the family for the family. And it really summarizes, what are your values? What are you going to do about them? How are you going to manage the business? Who is going to manage the business, among other things? And it's really the Bible and something that is reviewed periodically. And with that, hopefully we've shared some good ideas as to how people are able to professionalize their family business and really encourage everybody out there, whether it's a family business or a sole proprietor business or whatever kind of business, that I think professionalizing it can only help you out. Thank you very much.
Thank you. Thank you very much, James. Thank you very much for those insights. Very well articulated, summarized. And indeed, as you say, the professionalization of a business is a process. Well, among us, we have Mr. Adil Popat, who's part of Simba Corporation, now a group company. It has moved into a category of being a conglomerate. But before it reached there, it needed to go through this process of getting professionalized. Mr. Popat, share with us the insights of moving to a professionally run group with various other entities that are involved in the group.
Thank you, Raymond, for your introduction, and thank you, James, for an excellent presentation. I think you've very well articulated and taken away a lot of my thunder, but we're all in this together. I'll just give you a perspective from my point of view, and many of the things that James mentioned are similar. I think the first thing that, when we look at professionalizing an organization is to align the values of our family with the values of our business. And this is quite a time-consuming process. We took many months and took some advice, and we came out with values that we now call Aspire. And if you see the building I'm sitting in, it's called Aspire Center. So the values of the company and the values of the family are all articulated around Aspire. And Aspire means accountability, stewardship, people, innovation and integrity, responsibility and entrepreneurship. So we've articulated it very clearly, and each and every one of the family members and staff members are perfectly aligned on the values of the company and the family. The first thing that we did when we started to look at better professionalizing Simba is we started looking for the very best we could afford. Employing the best that you can afford is really the first place you start, because if you have bad people working for you or you have incompetent people working for you, then you're going to struggle. So you need to employ the best that you can afford, and you start with that. In my case, I was very fortunate. I found somebody who worked for an accounting firm and excellent experience in being a professional, and I brought him on board to help me professionalize the company as we move forward in our diversification policy. And of course, the other thing is, when you employ these people, you have to look after them. They have to be paid well, they have to be looked after, and you need to appreciate these people on a regular basis. Because at the end of the day, you are not doing the work you want in your professional organization. The other thing we did very quickly is we decided that our board has to be a board that has to be controlled in some form by independent directors. So we employed independent directors, and today we are 4 independent directors and 3 executive directors. What this does is it forces you to look at the business in a different way. It's no more a typical family business. It is a business that has to compete out there in the marketplace, and it has to be professional. So we brought in 3 professional independent directors who we pay, and these have been very specifically chosen of people who we know, who have got fantastic credentials and will challenge me and my rest of my executive directors in decisions that need to be done. Okay. At the same time, we decided that our auditor, our lawyers, and our banks have to be of certain credibility. So immediately when we started professionalizing, we made sure that we employed the best auditor available to us. And again, the same idea is that these people will challenge your accounts. They will make sure there's no monkey business going on, because one of the problems that we have in life is that we mix business and pleasure. And business is professional and pleasure is personal. And that's exactly what will happen. So with good auditors there, they challenge you and they make sure that the set of accounts that you set out, okay, are really credible. And I think this is really important. The other thing that we did was we started to involve the children and try and create the family dynamics of going forward. So every step I took as the CEO at that time, my wife and family were involved and they were aware. The strategy was discussed with them on a regular basis. So they're not sitting outside and there are big surprises coming to them. As we involved them in the business, we made sure that they were quite evident that they knew what was going on. And although none of them sit as directors on Simba's board, they participate in every board meeting, or they can participate in every board meeting. And then they cannot say to us, I did not know, because professionalizing is knowing as much as possible of your business, particularly if you're an owner, okay? The other thing, of course, we really looked at is by professionalizing, the one thing we need to do is reduce the fat in your business. You have to become more efficient. And what we did is we took on technology. Technology is a very good way in which we can become more efficient and spending less money. So your ERP solutions, document management solutions, all the solutions you can find, okay, from technology, we need to adopt. Because what that does makes you very, very much efficient, and your people get more efficient. So I think this is something that we've really been good at. Improving governance right through the organization is very, very important. And we started looking at things in a much more professional manner by taking good practices, as James has mentioned. Best practices, what's the way to do this? How do we move this organization forward? And holding people accountable is really, really important. So having governance in every step of the way is something very important. And of course, on the board, we have 3 committees: Governance and Nomination Committee, headed by a non-executive. We have a Finance and Strategy Committee, headed by a non-executive. And we have an ARC, which is Accounts and Risk Management Committee, again, headed by a non-executive director. These committees drive the agenda on a regular basis. Of course, ensuring that we have created a strategy is very important. There is no use of being professional if you don't have an articulated strategy. And for us, it was very clear. We were diversifying, we were growing the base, and we were making sure that we didn't get stuck in one industry, because if one industry goes down and we have nothing to fall back on. So this is something that we articulated very, very clearly. We took in professionals who helped us, and we have a very clear strategy, which is now going to be updated for the next 5 years. Empowering people is very important. As you professionalize your business, what happens is you still want to keep control. Today, I sign no checks, and I would say 95% of the business is run without my participation. What does that mean? That means other people have been empowered, some family, but mostly not family, to do the job. And I think for me, this is extremely important. And you must empower your people, okay? Because when you pay them well, they need to perform. And you empower these people in giving them their opportunity to prove their worth. And I think this is really, really important. Having a reserve fund as a professional company is important. What a lot of people do is they make money, pay the dividend out, and then they have no safety net. So for us, creating that safety net was very good. And during COVID times, that strategy has helped us tremendously. Lastly, of course, is giving back. Simba has Simba Foundation. We are very proud that we have a completely dedicated foundation that gives back to the stakeholders that we work with. Simba Foundation does an incredible amount of things in our industry and also out of our industry, where we give back to the people that we interact with. So these are the main areas in which we have been professionalizing our business.
Thank you very much, Mr. Popat. Interesting ideas there. You've touched on a passionate topic I have and I'm researching on, which is digital innovations or innovation or technology in general in family businesses. As you mentioned, it facilitates efficiency. So very interesting ideas and tips that I'm sure the audience is and I welcome the audience to interact with us and ask some questions. I see one question that has been asked to James. But before we get into a Q&A and also more insights from the panel, I think it may be a good idea here to go to one of our consultants in the panel, Winnie, who works for ICA Trust. Their work, and she will mention a bit about what their work is, involves helping family businesses consolidate or get to, I'm sure she's an expert, she'll be able to explain it a bit more. So Winnie, you have the floor to educate us on trust and also touch on the corporate governance topic. Karibu.
Thank you very much, Raymond. Good afternoon, my esteemed panelists. I'm very honored to be seated here with you and hearing from you. Allow me to just share my screen. I did have a presentation for you. And we're going to be talking about professionalizing the family business operation. So the topic that I'm touching on is very broad, and as Adil and James have defined them from experience, it covers a lot to do with business, general business. But here we're focusing on family business, how to make family business not be deemed as just a business to benefit solely the family, but a business looked at as a professional organization. So we'll talk a little bit about corporate governance, trusts, and how you can protect your wealth through that. So the first thing that we know is when we're looking at family companies, it greatly involves relationships, alliances, mostly people who are related. And as Mr. Mwangi had said, they're related either by blood, by marriage. It could be an extension of people who call themselves family and they create one business and they want it to grow for their benefit and the benefit of their other generations. So they significantly rely on trust. A lot of the business operations also rely on the trust that flows within these family organizations. So as they have simply defined, professionalization is simply putting together structures, creating a framework that allows you to employ good skill, to acquire great resources, move into better technology that will house the firm without necessarily needing the family. The company needs a good governance structure, and good governance requires all the structures to come together: the people, the infrastructure, the network of those people involved, and the decision makers. So when we're talking about corporate governance in family business, the practices that you're going to be instilling in your family business need to affect the shareholders, all stakeholders, the board decision makers, the management, and the employees. All these people make up the company, but the people who create it are fundamentally and as a foundation a family. So you need the family to balance the control of the company versus the need for them to profit in the company. They need to look at themselves as the stakeholders without necessarily needing to be the drivers of the company. So corporate governance comes in to allow the family to learn different practices in business that allows them to move their business from a small farm to a great venture, which as Raymond has mentioned, Simba Corp is a conglomerate. So that's among the great ventures that we want to create family business as. Corporate governance is founded on principles that have been mentioned under the Organization of Economic and Corporate Development, and the few simply defined as accountability, transparency, responsibility, and fairness. The shareholders, the stakeholders, the management, and all the employees need to rely on these fundamental pillars. They need to know them. They need to understand how they have been put together within the company so that they can work in unity to grow the company. As Mr. Mwangi had said, it took for them in their second generation to sit down and write down their core values, their core principles, to design and define the roles that they play within the company so that they can move together to build a better company, which works together for their good. Together being, you find out who are better skilled at this, who can be educated for this purpose, who can be selected for decision-making. What exactly do we need to put together a framework that can govern the company in a more professional manner? So what are we going to be considering today? The corporate governance is, we've already discussed it, and the experts in the industry have already explained their insights on how to create corporate governance. But here we're talking about corporate governance for succession purposes. How do I make my company outlive me? What am I supposed to be considering? Why am I considering it? How can I do it so that my company outlives me, outlives my son and my daughter, outlives them to the grandchildren and the great-grandchildren? We have the Rockefellers of the world who have experienced this for centuries. We can learn a little bit from them. So we start from the beginning. What is involved? What are we looking at? In a family business, we've already talked about strategizing, strategic planning, and putting together the resources that you require, employing the best of the best that you can afford, employing better resources, employing suppliers who can provide you better equipped reasoning. They can give you the best services at your best price. We have done strategic planning. We have also seen financial planning. You know, you can have a reserve fund set together for your company, but what is estate planning? Because looking at the people that are forming this company, they are a family, so they do belong to one estate. How do they then include estate planning within their own corporate governance to allow the company to move from one lifetime to the next lifetime, to the next, and outlive everyone who was the first, second, third generation? This involves meeting the needs of the company's technological needs, the company's intellectual needs, the company's governance needs over the time, so that these individuals are not only looking at the present, they're not only focused on the roles that they're playing right now, but they're also looking at how they can move the transparency and the responsibility that they carry right now to the next generation. I have highlighted the word settler. A settler is a person who creates, a person who gathers and puts all their assets in one, probably in one book or in a piece of paper, and you say, I want to run this successful business. I have this, it owns this. These are the people who manage it. I have employed specific people. How then can I put them together and allow my family to take over without them crumbling or before they understand what it's about? And here is where a trust becomes the most efficient vehicle for the transfer of the beneficial ownership rights. You have a person who has created a giant of a company. They do not want it to crumble. They do not want it to die over time, but they want it to outlive them and grow. So here we talk about trust. An estate plan is simply you putting together a very orderly administration for distributing your property or your business. And this can be done while you're alive. It does not only have to be when you pass away. So creating an estate plan is part of your greater financial planning. It's part of creating corporate governance within your family. Is creating an estate plan that includes your company, includes the businesses that you're trying to run. Even as an entrepreneur, you don't want the business to only stick to you as I'm the entrepreneur and therefore I have created this business, but you would want your next generation to also continue this business. So an estate plan is a great tool to use to be able to have, longevity. And that's among the first reasons as to why we must have a plan. You're contributing to the longevity of your company. You're encouraging the professionalization process, because when you think that your business is going to live 100, 200 years, you want to employ the best skills, you want to build, the best infrastructure, you want to have the greatest technology of the time to run your business from time to time. You also want to assist families in understanding their roles in the companies. There are people who are best suited to be in management. Some may even be best suited to be in a technical employee of the company. Some are best suited to just sit as shareholders and give their insight as to how the company can move and become profit-making. Those are the different roles that a family member can play within the company that allows that company to grow seamlessly and without unnecessary roadblocks. You can transition, and if, for example, a family is only relying on their general manager and the general manager passes on, it will hit a standstill. We'll be at a roadblock. How do we stop that roadblock? How do we break it before it comes to us? People tend to think that an estate plan is only created for the purpose of distributing inheritance, but that's not the case. You may fall incapacitated. We have lived in a time where, we've lived through a pandemic where people have lost not only their ability to work, but they've also lost some abilities, their own physical abilities. So what if you become incapacitated? What if you cannot make these decisions for yourself? A company should not be staggering. It should also not grind to a halt just because one person is unable to make these decisions. And that is why it is crucial for a company to plan their succession, to plan the move to the next generation. Take control of what happens next. Yeah. If you have a trust, you can take control of what happens next to your loved ones. Your business is part of your loved ones. You love your family forms your business. So both your family and your business can be taken care of before you're unable to do so yourself. What are the benefits of professionalizing your family business? And in this case, we're talking about creating a succession plan and making it a professional move for your business. You prevent a deadlock in decision making. You are going to prevent family fights, family feuds where nobody understands the values that you had, so they want to incorporate their own individual values. Sometimes people think we are moving in one direction and you find there's a detour somewhere that someone wishes to take. But if you sat down, as Mr. Mwangi and his clan wisely did, sit down and discuss, put together your core values, streamline them so that there's no fight within the family and therefore there are no disruptions within your business. Strengthening family discipline and commitment to the business. When you put together a structure, when you create a framework, when you ensure that only the best can come into the business, then it means your family is also going to strive to become the best for the business. They will educate themselves, they'll employ better skills to grow the business. You're going to guard the company's core values. Yes. So if one of your values is charitable causes, then you're going to guard that your company will always give back, whether you're here or not. they will always give back because this is something that has already been planned for, taken care of, and has been set down as one of the company's values. You can appoint your trusted executors and administrators for a time when you're unable to do things for yourself. For a time when you may not be with us on this earth, you may have passed on to the next dimension. So for that time, you need someone who understands your goals, your vision for your business to then carry it forward. And who better than your family? You are also empowering your management and your employees to make independent decisions. When they know there's a succession plan, they know how they can move along the company, how they can drive the business, knowing the person who's going to take over will carry on the same way our decision maker has been doing it. You'll also attract, develop, and retain great family and non-family talent. We would want a family of 1,000 people, but that's not possible in this day and age, you know? So if your family relations cannot grow in leaps and bounds, you want to attract people into your family business who form part of your family. They may not be related to you by blood, but because they touch on a very sensitive and important part of you, which is your business, then they become your family by extension. You also want to preserve your wealth. Nobody wants their estate to deplete just because you're not able to pass on the baton. You want to pass it on, you want to teach people how you're doing the business so that they can do it like you or better than you, you know. You want to provide for your company's selected charitable causes. Many people do not believe in giving back. They're probably looking at your business and they're waiting to just, you know, piece it apart. But you want to look at it as a family and say, look, as a family, we sit down and give back to our community once a year. This will be carried on, whether it is by you, whether it is the people that will be employed by your successors. This will be carried on if you create a plan. What are the benefits of coming up with a plan and going the trust route? No capital gains tax when you're distributing your property. No corporate income tax is chargeable to trusts, and this is legally enshrined. There's no income tax for payment made to beneficiaries, and the beneficiaries are the people who are named as the ones who the trust is created for. There's a beneficiary who may be in need of education, medical treatment. Some are in need of housing, probably in their early adulthood before they find their footing in the world. These payments made out to such beneficiaries are not tax liable. You are also not liable for any taxes to beneficiaries paid for any monies below 10 million per beneficiary. So this allows some buffer when you're creating a trust and allowing your beneficiaries to navigate your business without necessarily being physically involved, but they're involved and they're also earning from it. A tax is a great tool to plan your succession. And there's also minimal stamp duty and transfer costs. I mean, taxes are a pain and we do not want to experience them if we didn't have to. So save yourself. What if I don't plan? We won't delve too much into this, but we have all heard the term intestate. Intestate, maybe you have come up to see it in a newspaper or, you know, a legal friend somewhere who has mentioned it to you, but intestate simply means you did not plan. Therefore, you know, the state must help you plan once you pass on. But you don't want your business to fall into the state's hands. You don't want someone who has not seen your vision, who has not experienced the values of a company to make decisions just because you're not there. So you want to remain accountable. You also want the business to remain accountable and to remain fair to all who are benefiting from it. So legally speaking, the laws that I'm basing my discussion on are the law of succession, the Trustees Act, the Perpetual Succession Act, the Income Tax Act, Finance Act, the Trustees Act, and all enshrined in the Constitution of Kenya 2010. All these laws help us create an entity that allows you to plan for the succession of your business, that allows your family to also join in the plan of that succession, which is good financial governance. So let's get into family trusts. This is, as I'd mentioned before, family businesses are founded on trust. So why not create a family trust? This is the basic concept of a trust. You, as the person who owns the business, or the family, the individuals in the family that own the business, sit down and decide, this is what the business has. These are the assets that we own, and this is how we want it to benefit us. You probably do not have beneficiaries who are of age to take over your business, and we're not guaranteed tomorrow. Nobody has a sight of the next hour. We are only living hour by hour, hoping that we will be there tomorrow, a year from now, 10 years from now, to continue doing what we do best. But what if we are not? We can create a trust that protects not only your physical assets, but protects your business and protects your loved ones. Within this trust, you are appointing a trustee. You're giving a trustee a view, a window, a door into your wealth, into your business, allowing them to see, look, this is how we run business here, and therefore, these are the people I'm putting you in charge of, and you should participate in my business. You can allow the trustee to participate in your business, to either appoint a director, that then takes part in the decision making of a company. You can allow the trustee to own some shares and therefore earn from the company and trickle down to your beneficiaries, because we want it to grow and to go on for generations. The beneficiaries can also come up to the trustee and say, look, we understand how the business now works. Please show us how we can get involved in it. We were not able to do so when the settler was around, but now that we're able to do so, the trustee can hold their hand and move them from just being mere beneficiaries to being part of the business, being part of the family business. The trustee can also have what the law calls an appointer, or a guardian, or a protectorate committee. You can have your family sit in as a committee and decide, here we sit and we say how the trustee shall manage the assets that the business allows us to have. This is how the beneficiaries will be taken care of. If a trustee wishes to make a decision, they can also consult and say, look, we want the new management to take this route. Is it possible to appoint a director who will drive this purpose? Because the trustee is enabled by the settler to make such decisions. So what are the essentials of a trust? There are only three. You must create a trust with a purpose. There's a reason for why you're creating this trust. You must also place an asset in the trust. It could be a business, it could be a physical asset that is being run under a business. And you must also create it for specific people, beneficiaries, a group of people. They may be related to you by blood or non-blood relations. They may also be able to carry a charitable entity. These are part of the beneficiaries of your estate, and this can be part of your plan. When you're creating your trust and planning the succession of your business, you can create it such that it will not only house your family, your nuclear extended family, but it will also house the things that you care for in this world, the things that you would like to continue gaining from you. So how do you do it? How do we set up this trust? You create a legal document called a trust deed, which creates the trust. This is the constitutive document. As a family, you can sit down and create this trust and give it, give the trustee roles, give the beneficiaries roles. You can select the powers that the trustee can have. This document can be amended. It can move on from one generation to the next. It can increase the number of beneficiaries. It can add to the assets. As we have said, it already receives assets at minimal tax liability, and it's a good way to continue funding the family, to allow them to grow, to develop the skills necessary to continue running the business. So once you've created this trust, you fund the trust. You put assets into the trust. These assets can, as I said, be physical or monetary or a business. as long as you have handed over the trust to an asset to the trust. So as we come to the end of my presentation, we are here to build legacies that live beyond us. We are here to make sure that whatever we have built will resonate for generations to come. The ripple effect begins now and continues for centuries to come. Thank you for listening to me. You can direct any questions through the moderator. We are here to answer. Thank you.
Thank you very much, Winnie. Quite comprehensive, and of course, ICA Trust are consultants, they are experts in trusts, and they can assist in this. I just want to also laud all the different people who were registered and were able to give us quite a number of questions that came while you're doing the registration. And I think we have talked to many of the questions. If we were to look at the topics we have covered so far, we have covered professionalization. We have covered aspects of understanding what professionalization means in a family business. We have covered corporate governance and also by extension, the idea of trust management from ICA line. Now, before we can get into the panel, I just wanted to run a quick poll to just determine from you what is a pain point if you're running a family business, and also that also the panelists are able to understand the different pain points that are within the room. So I will invite Caroline, if we can run the poll. There's just one question. So just a very quick question there. The key issue I'm keen on is it family governance? Is it corporate governance? Is it succession? Is it financial governance? Is it family business training? I think the poll is up, so you can go ahead to participate in it. Caroline, are we participating?
Yes, it's going on well. We are at 35% participation.
Okay.
Let's keep on.
All right. So as you go along filling in the poll, of course, one of the issues that is very clear when we talk about family businesses is the distinction between corporate governance, which, as we know it and as has been presented, is key for a family business and also a non-family business. But I think also fundamentally is to appreciate the need for family governance. Yeah, just based on my quick opening remarks, we are aware that a family business is unique based on the fact that there are two avenues of governance. Yeah, so corporate governance as we know it, and also family governance. So as we get into the panel, we may want to hear views based on also the experiences and the view and the expertise that the panel has on, you know, which way, yeah, on this. Yeah. Caroline, so what do we have?
We are at 63%. Let's keep on participation.
All right, so 2 more minutes and then we continue with the panel. So as you continue filling, maybe I could just direct one question to James. I think the first question that was asked is, how do you create, what are the tips to create a family constitution? How often should it be revised according to your experience? James?
Okay, I think in terms of, you know, setting up a family constitution, it obviously starts with some sort of education, and there's plenty of places to get information on family constitutions. The internet is one quick, easy way. There are thousands of examples. Obviously, if you are in a school setting like Strathmore, they have courses that teach on family constitution and family governance. So those are some key areas where you can get more information and also get people who are able to assist you. In our particular case, our process was, obviously we went through and did what we needed to do, but we also sought families that had gone through the process. Just to understand how did it work for them, what did they learn, what would they recommend, what challenges did they have, and they also gave us several professionals who assist families with family constitutions to talk to. So we had to interview them just to get their feel and see what happens. In our particular case, we are actually in the process of formalizing our family constitution. We've gone through several drafts. So we are not in a position to say that, yes, this is done and we continue working on it. And I believe it should be reviewed regularly, and maybe regularly is probably every 2 to 3 years, just to see if anything has changed or circumstances have changed that would warrant anything major happening. I hope that has helped.
Yeah. Okay, thank you very much, James, and thanks for hinting on what we are doing in the business school. So I have copied in the chat message the copy of the family business constitution that we are availing to family businesses to study, to incorporate into their own family businesses. So you can look at that as a template that can be used. And of course, we are there to help and to assist between our Strathmore Dispute Resolution Center, which has a number of legal people, and also the enterprise program and the programs that we have. So as part of having a template, this is a place you can begin, and I have shared that in the chat. Okay, so finally, Caroline, if you could just let us know of the results. We're not able to see here.
Okay, we are at 74%. I will end the poll and share results.
Yeah, just end the poll. Let's see what is a key challenge.
Here we go.
Okay, so family governance is a key issue, 26%, then followed by family business training. So Eunice will talk about family business training later on. And then corporate governance has 13%. Well, 20% succession is always a big issue to people. And then we have financial governance at 16%. Okay, so this is the pain point of people, distinguished panelists. And maybe now we can just delve into, looking at corporate governance, evaluating the meeting point between corporate financial governance, decision-making. Perhaps we can, call on you to give some insights and comments on governance in a family business and the impact of this governance to the professionalization of a family business. Yeah. I think James did go into depth to describe, what are the concerns of a family business professionalization, standards, performance, ethical business conduct, and conflict resolutions. So probably we could begin with Roland, just to highlight a number of what would it mean from a financial governance point of view. Roland.
Yeah, thank you, Raymond, for that invitation. I don't know if you can give me like 3, 4, 5 minutes just to share briefly about financial governance for family businesses. Maybe I'll just share my screen. My name is Ronald, the Group Managing Partner of Ronald East Africa. We are one of the best audit firm that Adil Popat talked about. So if you're looking for a good auditor, we're here to help you, and also on tax issues. And we also consult a lot on family businesses. So in terms of financial governance for family businesses, I believe it will entail some critical aspects, and one is financial accountability for the family businesses in terms of how do we account for financial transactions in a family business setup, so that this information is at the disposal of every family member participating in the business. The other aspect that is also of very critical importance is the issue of disclosure of financial transactions, so that there is transparency and there are no hidden cards in the dealing and transacting with family members. The other issue that I feel is very critical for family businesses, issues with the compliance with the laws and regulations, because there is a laxity for family business to sit back when it comes to compliance. And we've seen even in the media, family businesses getting in trouble to the extent of almost winding down because of issues with compliance to taxes, prudent application of financial resources, and then also equitable application of these resources. On financial accountability, what is important is, as a family business, we need to see how do we maintain clear records of all incomes of family business, expenses, business assets, liabilities, and equity contribution from family members. There must be proper records of that, so that it is actually more apparent and explicit to all the participants in the family business. And this needs to be put on the table so that it's discussed with all the family members participating in the business. Issues to do with accounting and updating all family members on the business performance, especially on financial terms. And this should be maybe in the form of management accounts on a monthly basis, whereby family members discuss and actually give their input in terms of how do they achieve financial prosperity through reorganizations of expenses, of liabilities and assets of the business, at the same time just trying to manage the income of the business. Also, as an auditor, I will always say that I've come across family businesses that don't have the services of an external auditor. And as Adil said, that you need not only an external auditor, a good auditor who have an understanding of the business practices and is able to interrogate your financial decisions and offer positive criticism in terms of how do you move from A to B in terms of the financial aspects. This creates some element of credibility and trust also to other family members, and tabling every financial year a report of independent auditor is very critical in actually enhancing financial governance for family business. The other area that is also critical that I spoke about is the issue of disclosure. And mostly when you're talking about disclosure of financial transactions, I'm saying we need to disclose what is the compensation to each and every family members who are participating in the business. Probably we're looking at, of course, if you're talking about listed companies, they're saying we need to disclose how much we're paying directors. But in a family setup, you will expect that there is some policy framework that requires that even in the financial statements, we are able to disclose these are dealings with family members, and even how much does every family member take home, and what does that entail. That is very critical to ensure that there is trust in a family setup. The other issue is issues to do with the shareholder changes to the family business. That needs also to be transparent, and also agree and disclose additional family members, family members involved in the business. Sometimes when you have some members running the business, maybe as a CEO and all that, there might be element of trust issues that are brought about by onboarding some other extended family members without being transparent. And this might actually bring maybe source of conflict when it comes to financial governance. And also agreeing to any other necessary additional disclosures. From time to time, as prescribed by the family charter, family meetings will inform what family members need to know about the financial performance of the business. And as long as it's reasonable and it can be done, it is important that those who are charged with the running of the organization appraise other members of the family on the progress of the business. Issues to do with the compliance with the laws and regulations, mostly taxes, to mitigate the risk of non-compliance is very critical. My friend James Mwangi mentioned it very impressively. So this is something that also needs to be done. The other issue is just that even though the family will have its own rules and regulations or family policies or family charter that stipulates otherwise, it is important to look at what are other compliance issues, especially with the Companies Act, also with the Trust Act as alluded by Winnie. Are we compliant maybe in that mode of registration that we have as a family? Labor laws, sometimes you onboard members of the family and sometimes you neglect their needs in terms of compensation, especially if they don't participate in decision making. This brings a lot of apathy in family business. So it's important that we realign even the onboarding and even employment of family members, make sure that we are compliant with the labor laws, because this also poses a risk to running of the family businesses. When I'm talking about prudent application of financial resources, family boards to ensure that there is investment policies, strategies, policy strategy and strategies agreed upon by all family members to ensure that to guide on application of resources and disposition of profits. How do we share profits? What are the investment strategy do we have as a family? Is it agreeable to all of us? Can all of us actually maybe hold on sharing dividends and from the profits until we are able to reinvest in the business and then make sure that the business grows much bigger than it is to reward each one of us? Also, we need to look at issues to do with expenditure incurred based on properly laid down procedures and approvals to be put in place so that there is checks and balances. So there's no doubt that there is dominancy of maybe one member of the family in actually running of the expenses of the family, because you've seen that maybe a member of the family, maybe if they are siblings, one son buys a car, the others get very, very disoriented. Maybe it's a very high-end car from Simbacol. And you know, and the others are saying, how did you afford that? And when spouses comes in, it really complicates the issues of financial governance in family business. The other issue that I've seen that most family businesses will also operate on trust issue. There is no clear description of who is the leader, the leadership structures, the roles and responsibilities of a family member, so that there is a clarity even in the running of the organization and even application of financial resources. You cannot have every family member with a checkbook, runs to the bank wherever he needs money, draws, so that it's like a war of expenditure rather than a more clear laid out strategy in terms of application of our financial resources. The other area that I find very critical is the issue of compensation, salaries and other employment benefits. You might find that there are some family members not involved in the day-to-day running of the business. How do we compensate them? Is it just on an arbitrary basis or is based on performance? I know some of the questions that were sent to me by the organizers. Their members were saying, how do we compensate? And even compensation for family members, it should be performance-based, especially when it comes to salaries and any other employment benefits that are being given to them. Because sometimes you might, it's not unique to have some lazy members in the family, members who are not interested in the business. It is unfair that you pay similar rewards to everyone as if each and every family member is doing the same thing. So there must be clear policies in terms of how do we remunerate family members in the business. Issues to do also with the dividends from shares invested, that's another source of income for family members, sitting allowances wherever they attend meetings. So that this is a very good way to check family members who don't want to participate in meeting, at least reward those who come to meetings. Directors' fees and remunerations, wherever they are used as directors, and then just like will be any other director. And the issues also of stock issues to family members. This is in terms of shares. How do we use how do we give them shares? Maybe in terms of compensation, probably maybe through sweat equity, those who get employed, and maybe for fake salaries because the business is not performing very well. Can we give them shares as a compensation for their effort into the business? Use of private property for individual members of a family, especially for the setting up of family business. There must also be a proper compensation model for these families who contribute their individual property that disadvantage them from the others. And also we've seen that some families will also lend the business money so that it can operate in terms of when there is issues like Corona, there's cash constraints, and probably you don't have a lot of financial reserves like Simbacol. you might need some family members to contribute some money, and that you compensate them through interest without those kind of clearly laid out procedures. Then it will also cause a lot of conflicts within the family. The other issue is that I will talk about also that I have found very relevant for families is the issuance of shares to family members. You find that sometimes this is not done in a more defined way, but then how do you issue shares to family members? It is important that family members will issue the shares as their inheritance. That is okay if you give them as an inheritance into the business, or they need to purchase those shares from other family members. I've actually realized that the issue we have with succession planning, you are telling the old man, the founder of the company, to go home and you run the business without a clear compensation framework for him. For me, if I have the son, soon my boys are growing up, I have to tell them to buy into the company. They have to work hard, and then I give them the shares. But of course, probably talking to Winnie, we could have an arrangement that these shares are also held in trust so that they also don't give them and sell. So it's good to have a framework that is very clear, and also policies that can also be made so that those members who work in the family can also be compensated in the form of shares, what we refer to sweat equity. So I believe these are some of the most critical issues that I want to share with our participants today. And I believe we can engage more in terms, maybe on a personal level, on how do we actually enhance financial governance among family business. So thank you so much, and back to you.
Thank you. Thank you very much, Roland. So probably we can move to James, and you can highlight any other aspects of family governance that probably is missing so far.
No, I think everyone has done an excellent job. I've learned a lot from Winnie and Ronald, not to mention Adil Poppers out there. I think the key thing is really to just re-emphasize the importance of transparency and building trust within the organization and within the family. So I think that's really the bedrock of a lot of things. As long as there's trust, transparency, and there's confidence that things are going on well, the rest of these things work out quite well. You could have trust, but you also need to figure out what goes into those trusts and how they're managed. So I think it's been an excellent discussion, and I've learned a lot. But I think from a family business perspective, just making sure that trust and confidence and transparency run deep, then you're probably going to sort out 80–90% of your problems.
Okay, thank you very much. Mr. Popat, there are a couple of questions around, there are people who are lazy in the business. There's the issue of salaries, there's the issue of a husband or a wife in one of the questions previously documented. Any more ideas around professionalizing, and here looking at the family and saying, look, you as a family need to think about professionalizing. These are 2, 3, 4 things you need to think about.
Sure. As far as family members are concerned, I think I will just take a step back and talk about what we've done, and then how family members have fitted in to the organization. I think one thing is for sure, that it's always the wish of the matriarch or patriarch to have family members in the business as far as is possible. And I think that's a cultural issue. I think particularly in our culture, having family members running our own businesses is something that culturally is very positive. However, when you professionalize, sometimes you have to be a little cautious that you don't have some of these traditional sentimental values overpower success of the business. This is very, very important. So in our business, what we did first is we went down the route of saying, what's a professional organization and how do we get there? And then the family structure and how it fits came later. And this is predominantly because my children are younger. So there was no immediate need to fit them into the business, which was just, it's a coincidence, because in some of the examples mentioned, Family members are there, they are participating, etc. So the dynamic is quite different. So I'm going to talk from my point of view. The first thing we did to professionalization is we created an ethics and integrity policy, right? You cannot have a professional organization when people are unethical under you, particularly starting with your management. So every person that joins Simba has to sign, including me, an ethics and integrity policy. And in that, there is a conflict of interest policy. If my salesman is selling my car, okay, that is in my banner, and then he goes home in the evening and sells somebody else's car, there's a conflict of interest, and he has to note that down. That brings everybody to the table and say, look, I'm working for one company, professional. Very, very important. The second thing we did is when we brought the new independent directors in, we created the complete structure behind having a professional board. That means a board charter, conflict of interest for board members in case we do business with them, okay, and board training, and a whole host of things that I'm sure you can pick up on the internet and say exactly. And this takes time. It took us 3 years to get the whole board structure really, working at seamlessly, because you have all sorts of different ideas coming in. But that's very important, and that basically puts you into a straitjacket. Professionalism means what? You've got to do things right. Okay? There's no chenga that you're doing that I can do something outside. It has to be within certain rules and regulations. And that is difficult as a family business, right? If my cousin says I need a loan and this and that, it doesn't come from the business. It comes from my own pocket. This is the difference. This is a very clear wedge we have created between the business side and the family side. And like some of the members have mentioned, I think Ronald mentioned, there's the dividend policy, there's a policy of how do we get money out. If you do take a loan, for example, and some families do this, there's an interest charged, and that's been agreed upon. So all these rules and regulations have to be put in place, and it's very important. And the independent directors will be pushing this constantly, particularly if you've chosen good ones. And someone like Ronald sitting on as an independent director will be telling you all the time, hey, you can't do this, you can't do this, you can't do this, because he's been down that route of auditing professional companies. And he will be giving you that example to say, you can do this, you can't do this. And I think listening to that is very important, because that then keeps people on the straight and narrow. It's very, very important. Of course, I mentioned an excellent and competent team, but then having that team empowered and having that team analyze and evaluate. That's critical, right? Don't employ people and then just let it go. You have to evaluate. And that's the job of the family members who sit on the board. Is my CEO being evaluated? So in our board, our CEO is evaluated every year. And we say, all right, you said you're going to do A, B, C. This is your budget. This is your strategy. What did you achieve? Particularly if he's not a family member, but even more if he's a family member. And this is how you weed out the excellence from the mediocrity. If it's mediocre, do you want him to stay on? And then they will see it straight away that I am not able to perform, because you will make them sign off on the budget up front. Say, this is what you said you're going to do. Now this is, and then of course we agree, is the other people that can do it in the family, or do we leave this for somebody who really is able to do it and is a professional? So I think that's for me is critical. So the empowering and the evaluation of your CEO and the people that come underneath him. As far as the second generation is concerned, right, the first thing we did is involve them very early. Even when they were in school, they knew the business. You have to live and breathe your business. And I'm sure James will tell you, to run a spa in Nevasha and get it to work successful and do all the nits and bits, this is not easy. But if somebody is not standing behind you, who knows also, then you cannot do this. Because tomorrow James goes and the whole collapse. We cannot afford that. So you got to get your children or family members involved, and then you choose as the boss to say, this is the right person. So in my case, I'm very lucky. I have 3 children. Each has got a different skill. Okay. One is really good at design. She's an architectural design expert, and she has that ability to look at things and put it together. Another one is meticulous in financial control and all that. and the other one is a salesperson, a marketing person. So I'm using the 3 skills in some form, but they still are not on the board of the company. They need to earn their stripes before they get onto the board. And that takes time, because that means my board members should say, excuse me, it's time for one of your children to join the board. It's not for me to say it, because that's where I'm expecting them to say it. And we've been very lucky, board members have been pushing more engagement from the family, because you know, if Adil Popat is not there, who are they going to deal with? They'll have to deal with the family. So that interaction and getting them together is very important. Financial competence for family members is paramount. If a family member does not understand financial analysis, understand what financial analysis, financial competence is, they will not be able, you will not be able to argue with that person. You don't pay a dividend when the company is losing money, but family members will come and ask and say, I need something, right? So I think this is really important. And then creating this net, safety net, as I mentioned, this could be a medical safety net. It could be a safety net for people in difficulties, right? And they are given out under certain rules and regulations, but you agree as a family. What's good for one is good for the other. So we do it for the whole group and see how we can help each other out. Because our cultural difference between us and the Western cultures is that we really care for family. Yeah. And when we talk family business, it's not like family business in some other parts of the world. We live and breathe the family business, and we cannot let a family member go down. The whole Harambee institution came from family, right? That somebody is doing badly, we help them. And I think this is critical for people to understand. So we can't be hard-nosed like some of the Western cultures are, right? We need to have a middle of a ground, and then we create the structure behind it. But we've got to do that in certain rules and regulations, okay? Of course, developing individual strengths is very more, and then creating a conflict resolution mechanism. In all honesty, we have done part of it. We're not ready yet as a family, but we're getting there. And the thing is to actually get consensus between everybody. How do we sort out a conflict? And either you go to an arbitrator or whatever you want, which are very expensive ways, or as I am doing, I have a council of elders. When I am not around, council of elders that have been elected or nominated by me, but approved by beneficiaries, as Winnie was talking about beneficiaries or family members, they will go to the council of elders. And those people are independent, except one family member who coordinates it together. And that person makes sure that this conflict is then brought to the table, but he or she cannot have the deciding vote. It's got to be independently decided. And it's decided on the rules that I have talked to the council of elders, which is what's best for the company first, because if that is good, it will always help the family. So I think in a nutshell, I think this is really, really important to focus on being very professional.
Very, very interesting insight. I picked the one of Council of Elders. Probably would want to ask you, because conflict management is just one critical thing that people are having as a difficult, because of conflict, then we cannot think of professionalization. Because of conflict, we cannot think about the family business constitution. We cannot think about a family council. We cannot think about family meetings. Just looking at this idea of the council, council of elders, are these members, these are friends, colleagues, people how did you go about setting it up? Just something that can help many family businesses. In
my case, some of the council of elders will be connected to the business either as a board director or not. There were people that have been integrating with the family in some form, right? Not sometimes very directly, but sometimes indirectly.
Oh, we've lost Mr. Popat. Are you there? I think we've lost him. Okay, very good.
Hello?
Oh, yes, yeah, you're back. Go ahead.
Back, sorry.
Yeah.
So as I was saying, you've got to get people in the family to say, these are 3 or 4 people that we really trust. And of course, you review every this is the same guy.
We're losing you, Mr. Poppet. So maybe we can, as we wait for Mr. Poppet, we can just get a comment from James or from Ronald around the issue of informality. We know that generally in our country, and just looking at the studies that have been done, at least the latest study we have around MSMEs, who contribute to 80% of employment in our country, notes that 73% of these prefer to remain informal. In your view, Mr. Boss, do you think this is a contributor to a lack of professionalization? And how can we then motivate these enterprises to thinking about professionalization, even when they are driven to, working around informality? Mr. Bossi.
Thank you, Raymond. I think the issue surrounding informality is an issue that has affected most businesses. Actually, most of the Kenyan family businesses are largely informal. And I believe the reason why I believe, and looking at the PwC report and the UNDP report, I believe the issue that are surrounding a lot of informality is lack of understanding. Most of the entrepreneurs in Kenya, they have no understanding in terms of what are the benefits of formalizing a business, even in terms of incorporating the business or registering the business, getting to comply with all taxes. What are the benefits of it? And you realize that because of this lack of formalization, they miss out on a lot of opportunities. And having interacted with a number of family businesses and entrepreneurs, they will always say that formalization actually will bring them to tax compliance, but not understanding that, in taxation, KRA is not asking you to give them 100%, is going to ask maybe a percentage of the profit. Because so this informalization does not help, because then they remain with very low revenue, because they're not able to deal with corporates. Because as you know, globally, corporates deal with corporates. You cannot be a corporate entity like ICLI or Symbicol and deal with Juakali informal sectors. So this informal sector, some of them are condemned to very low-end business. And then those businesses are not sustainable because there's no proper frameworks, there are no financial systems, there are no policies, framework that be able to govern their sustainability. So informality is a critical contributor to business and sustainability, because of lack of this formalization, then these businesses cannot even last to another generation. So they are merely what we call self-employed tools, just to put some unga on the table, but not really to allow for that sustainability, or just to put some food on the table, but without a sustainable structure that will see them maybe last into the future generation.
Thank you very much, Ronald. And I think generally looking at what's happening in the market, there's more emphasis now on trying to formalize, and we are trusting that with the push in technology as well that can create efficiency, people then can move towards formalization. Very interesting tips there. Just two last questions to both Poppet and James around succession. And of course, you have different experiences around succession. Probably Adil is moving towards now looking at almost the third generation. Any tips on, what should happen with those who are succeeding? And James, maybe you can begin by just looking at yourself as a second generation family member.
Thanks, Raymond. Like I had mentioned, a second generation family member. And in my particular case, I think I was lucky that, our founder, who was my dad, and I had worked quite closely for a very long time. So we were really not starting from scratch. However, going forward, I think it's important that we think about it and figure out how best to do this. In our particular case, we've started by, having job descriptions for, board members and for all members of staff, and having a formal way of being evaluated, so that even as you continue in your regular business on an annual basis, people have a sense of, throughout the organization, because sometimes succession is not really necessarily at the top, but do we have the best people doing the best jobs? And in the event that the best people are not doing the best jobs, then what do you do about it? But in the case of a family business, I think what's really important is to make sure that we continue educating everybody, the current family members who are in the business and the future ones, just to make sure that you have a good pool with which you can tap into and see how you're able to pick this up. In our particular case, we this year started formalizing. We even had an AGM where, even the kids who are 16 years and above are able to come. So some of this actually just starts off by, come and see what people do without necessarily putting in too much pressure, because, obviously of their age and everybody else. It's open to our in-laws, because sometimes you also want to make sure that, you don't have a very insular view of how you're doing things, and you open up to be able to get some sort of feedback from various people. Ours is a process. It has just started. And I'm sure as we go on, we'll keep perfecting that process of making sure that we have a seamless succession policy. But I think a lot of it just has to do with continuously making sure that everybody gets to be as good as they can, getting the best advisors, whether it's independent board members or consultants, and also learning from other people. I would love to have a chat with Adil and find out how he does some of this stuff, so that you're really not starting from scratch. So there's plenty of opportunities for people to learn and see what they can do.
Okay, very good. Just attaching the question I was to ask you, Mr. Adil, with the one from Matan here. How do we instill interest? I think you've mentioned it. Maybe you can emphasize any other perspective, interest from family members, especially children, into the running of the business. And also, how do you balance? Sometimes you don't want to force, you want to encourage. It's not just look, you have to be involved in the business. Any tips for the third generation and beyond family members?
Yeah, thank you. James, we can talk anytime. Pleasure. I'm sure they will share my number with you. As far as getting the family members, and particularly the children, involved, like I said, when we get them involved early, that's very positive. However, there are certain people that are just not made to be business people. They want to be professionals, they want to do something else. So we need to create a structure where you have participate, get a bigger share of the pie.
Oops, we are losing you, Mr. Popert.
Can you hear me?
Yeah, go ahead.
Like I said, we need participating members and non-participating. Percentage.
Okay, you're back.
Can you hear me?
Yes, go ahead.
I apologize for the internet, but it's out of my control. So like I said, getting participating and non-participating members of the family, and that's very, very important. I've been very lucky that all three of my children are involved and they like and enjoy the business. And I've just empowered my two girls. I have two daughters and a son. My son lives out of Kenya, and he's doing his own. He's doing a small family business outside. But my two daughters are very involved. And the one way we did this was to create an investment, which they took over, a smaller investment, and they took over and they developed the whole investment themselves. Actually, the whole team is behind them. I'm behind them. We've given a loan to the business, and they pay interest on that loan. But at the end of the day, it's their project. And in this way, they learn how to do business, and they learn how to engage by themselves. And we do not step on their toes. As I always tell to people, there is no difference between boys and girls. And in my case, because I have two girls, they are even more empowered than the son, because we need to empower women more, because that's 50% of the workforce that we have. And in this case, there's absolutely no difference between my son and my daughters. So we've really given them the key to the project. And they've just finished the project recently. It's called Nairobi Street Kitchen. And that was completely done by two of the daughters. You know, that did two or three things. One, it made them work together and appreciate each other's strengths and weaknesses. The second thing, they understood how to work under a professional platform, because they were asked questions. How about this? What about your financial control? What about this? What about this? And asked by professional people saying, hey, we need answers on all this. And they learned how to answer to professional people. So that brought the professional side in there. Then, of course, there's a return on investment, okay? And they know that they're going to get a return on investment based on performance. So all these things were put in. It's like a little, how do you say, setup that we create in an investment, and they learn from it. And then next time we do a bigger one, they get more involved, and then eventually bring them in the main business, where then they are now becoming directors and they know how to answer and how to perform. Because at the end of the day, whether it is family or no family, performance is the success of a business. It's useless to have all the bells and whistles if you're not performing, right? You're not making a profit. If there's no return for the shareholders, then the family members are going to be up in arms anyway. So we need to be able to tell them, yes, we are performing, and if we don't perform, we'll find another alternative. So I think that's the way in which I have empowered my children. And then actually, by the way, my wife is also very much involved. She knows everything that's going on. There are no secrets, and she's involved in the business. And she participates in a fantastic way, because one area where we were very poor was procurement. Today, nothing passes without her, and she saves us a huge amount of money. You know, and she's completely aligned in the way that we are developing the children.
Fantastic. Thank you very much for those insights, very practical insights. For sure, I mean, the issue is to ensure that the business of the future must be there. So, of course, professionalism is critical, performance is critical, and so on. I have a question here from Madrid, and I know Madrid was one of the participants in our last family business executive program. At some point, Mr. Popper did maybe put a lot of emphasis on independent directors from the family. How do you deal with onboarding spouses, in-laws, extended family members who may be skilled but may be considered outsiders? If you could take this on, James, and also probably any comments from Roland or Winnie. How do you deal with the onboarding spouses? So meaning they are not directly in the business, the in-laws, the extended family, who may be considered outsiders, if you have that experience.
Well, lucky for me or for us, I have 3 siblings. I have 2 brothers and 1 sister, and my brother and sister are both married, and our spouses all have jobs elsewhere out of the business. So it's not like they were waiting, or neither have we probably been attractive enough for them to be able to come. So I think there are 2 issues. One, what would have happened if they didn't have a job? That would have been a big problem. And would have had to deal with it. But I think it's something that is probably dealt with by looking at the perspective of, are they the right people? If they happen to be the best people, I think it would be in the families and companies' best interest to incorporate their input into the operations of the business. But at the same time, obviously, you've got these dynamics around, what's this family going to be like? What is it in the family constitution? How do we do this? How do we set up these rules? And I think it's going to get easier and easier for the generation that's coming behind us. So I think for now, my personal view would be for all companies, they should try and get the best people they can get, whether they are families or in-laws, or maybe independents. So I think we haven't had to really deal with it, but I'm open to the fact that obviously it's going to come up pretty soon. I'm not sure how Mr. Popat have dealt with that in their company.
Okay, very nice. Any comments, Roland? And also a parting shot, because we have run out of time. Just any closing remark?
Yeah, in terms of onboarding family members, I believe it should be done on merit. If maybe family members might not have the necessary competencies, maybe a business can also invest in terms of upskilling those family members so they're able to fit in properly into the business setup, so that you don't have family members who are not having the necessary competencies, then becoming a big burden to the other business. Also, in terms of the way we say, if you are onboarding family members, especially the children, even though you want to give them something, especially for the purpose of giving them an inheritance, it's always good to also make them work for it so that they just don't find it on a silver platter. The way Popat say that sometimes you have also to try to evaluate their competencies, and if they do something besides just the normal business, it's critical. And as a matter of fact, a good business, as you professionalize family business, it ceases being just maybe a specialized business in a certain market or a certain industry. So it is possible that as a business grows from one strength to another, you might find that there are family members who have the competencies that are actually required in the business. The way you say you could have somebody good in IT, you'll have somebody good in graphics, you'll have good in HR. Let those family members be onboarded based on their competencies. At the same time, have a very good external evaluation to check their competencies from time to time and have discussions on issues that regards performance in an open and transparent manner. That will actually ensure that there is seamless onboarding of other family members into the business.
Fantastic, very good. Any comment, Winnie? And also just a closing remark?
Thanks, Raymond. Interestingly, I think Ronald has mentioned that in a family business, you don't just qualify because you're family. That is it's an added advantage. But as Adil and James have pointed out, you must endeavor to evaluate each person and what they're bringing to the table. They may be family, but they also need to contribute in a way that grows your business, that benefits your business. There has to be a value add. There has to be not only interest and willingness to learn in the business, but also to contribute to the business. So when you're trying to incorporate your family, you may be looking at people who don't share the same value. Probably you want them to participate in the business, but they're not able to participate in the business, or you would love for them to benefit from the business. And that is why the discussion not only moves from who do I include, but how do I then benefit those who do not wish to be included? Because there's interest, there's willingness, there's merit, and most of all, competency. So all of that married into the family business then allows you to strategize, add those who are carefully skilled into your business, and then if they do not wish to be included or they're unable to be included, then you also plan the succession and the benefit for them in the business without being part of the business. Yeah, thank you again. Learned very much from this panel, and thank you for including us.
Thank you, Winnie. Very good. And of course, the importance of having a constitution, a council, the governance part is fundamental to come up with all these rules So I'll just call on a parting shot from James and Adil, then back to Boasi, who didn't make one, so that we just close on the panel. Mr. Adil.
Thank you very much. A very informative session, and I thank all the panelists, and I hope we will get a chance to meet personally once this COVID is done. But we've learned a lot today. My only parting shot is that in family, I think it's really important that we remove the sense of entitlement that we give to family members, particularly children when they're young. We are very good at spoiling our children. We give them whatever we want. And in this way, the sense of entitlement that they have is actually homegrown. We develop it for them. And in my case, it was very clear from very early age. If a kid gets hurt, don't pick him or her. Let them stand up by themselves. Because that creates that sense of entitlement. If they're going somewhere, they go on their own terms, not dad and mom giving them extra cash. These are the kind of rules that we need to have early on. So we remove that sense of entitlement. So that then when they do become mature, they understand what we talk about. You cannot discuss these things with people who are immature and have a sense of entitlement. So that's my parting shot. I think all parents that are out there who have got businesses, don't spoil your kids, don't give them a sense of entitlement, and you'll have a much better chance of getting this right. Thank you.
Fantastic. Thank you very much, Mr. Popper. James?
Thanks, Raymond, and thanks to everyone out there. I've really learned a lot too. I think my parting shot would be, I think families really need to consider having family constitutions and taking the time to think about what's important to them in terms of their values, their goals, their aspirations, and putting up all these rules. Like I'm sure Mr. Adil Popat had alluded, what happens if your kids want a free ride? I mean, it's in the constitution. For you to work in the business, this is what you need to do. This is what you need to happen. So I think just having that extra level of documentation and formality goes a long way in ensuring that the collective aspirations of the family are able to supersede any one particular incidents that might come up. The other thing, obviously, that's very apparent is there's a lot to learn. Today, I've learned a whole bunch. So I think just having a continuous framework that, learning is important. In our particular family, we are trying to institute, a family education day where you get, maybe, a Winnie or a Ronald come and talk to us and tell us what goes on. Talk to a lawyer, talk to whoever, talk to Mr. Popat and come and, talk to us how you guys have done this kind of stuff. So I think it's important for people to continuously engage in learning to make them the best they can be. And also, I think in my particular case, I'm a strong advocate for having good advisors. So try and make sure that you have good advisors and, a good place to start. Like, I'm sure if I really needed something, I'll call on to Strathmore and tell them, I'm looking for a mediator. I'm sure they'll find one somewhere, even though I don't know. So I think having a good frame of people and resources that you can dig into will ensure that, things run a lot smoother than they otherwise would. Thanks.
Thank you very much, James. Thank you for being with us. Roland, quick parting shot.
So I think I can say that families are a great compass that guides us in what we are doing. Families offer a lot of inspiration, especially for growth, and especially even to greater heights. Families also comfort even when you fail. So they are very critical because it's only in a family that you will be accepted even when you make mistakes. In an ordinary business setup, you will be fired automatically and be condemned to, lose. But it's important that even though the family is friendly, there is good professional practices within the family business. Family business should not be condemned to be just some very informal setups. They need to put up system and structures to grow from one strength to another, they need to institute proper financial governance so that this brings prosperity. So I encourage all the participants and the ones who have attended this meeting to ensure that they actually put into place professional institutions, they ensure that they access professional services, so they're able to build generational business in this country or even in Africa. Thank you.
Thank you very much. Thank you very much, my distinguished panelists, Mr. Popat, Mr. James Mwangi from NHPI, Popat from Simba Corporation, Mr. Winnie Maingi from ICA Trust, Lion Trust, Mr. Roland Musi from Roland LLP, and I see in our presence is also Peter Washira, who is the head of ICA Lion. Thank you very much for being part also of the sponsor for this event. I'm going to switch now to Eunice Mononi, who is the head of entrepreneurial programs, to just give a vote of thanks and to say something about the family business training. Welcome, Eunice. Thank you very much.
Thank you. Thank you so much, Raymond, and the distinguished panelists, and of course, the participants. Thank you so much. So my name is Eunice, heading the Entrepreneurship Center at the Strathmore University Business School. I'm so excited to see all of you here, of course, to have over 200 people seated for the 2 hours. This has been great. So at Strathmore University Business School, we are so keen in empowering the family-owned enterprises. And so we have developed a world-class program. We call it a Family Business Executive Program. It's a 6 days program that is spread now into six weeks. I remember when James did it, it was just 3 days. But now, since we have some people joining online because of COVID and others joining physically, we've decided to change it a little bit to go for 6 days, but the same content and whatever, all the things that our very, very experienced panelists have talked about, family governance, family dynamics, corporate governance, financial governance, all those things are the things that you would learn if you come to that program. So as we share the recordings today, we will also be sharing with you the program's details so that you can decide to join. I've seen a lot of participants from other countries, and yes, you could also join online, because we shall have a hybrid fashion, and the program will be starting next month from 14th September. So, and we encourage all the family members to join. If you've been able to learn today, then that was just a tip of what you would learn if you came to class. So thank you so much and for staying on. And so right now I want to give vote of thanks to each one of you. Thank you so much. You've made this day a success. And of course, I want to really start with thanking the panelists, of course, starting from James Mwangi, the one who gave the keynote address. Thank you so much for making it and even giving us your time, your knowledge, sharing the knowledge with other family business owners. This was great, great, great. And thank you for honoring us with your presence and your presentations. Thank you, Mr. Adil Popat. Thank you for your time. Thank you for great insights that you've shared today. We are so, so grateful. And of course, a lot of the people that participated today are going to learn from all the things that you have shared with us. And that's why we are still promising that we are going to share the recordings with all the participants so that they can listen to you more and more. Thank you, Winnie, for your expert knowledge, what you've taken us through. Actually, a lot of people have said, because I was reading the charts, people want these notes, It was great, and that was great presentation, a lot of knowledge there, a lot of notes that the participants will be flipping and, looking at what you have shared, and they will be implementing a lot of learnings from that. Thank you so much. And thank you even for the partnership from the ICA Lion Trust Company. You supported this webinar, and that's why it is a success. Thank you so much. Thank you, Ronald Bossi, from Ronald's LLP. Thank you so much and for your insights. And even when you are presenting, I saw people asking questions and asking if they can be able to get your presentation. Definitely we'll be sharing with them. Thank you so much. And even for making this webinar a success, you've participated a lot, even, promoting it and boosting, paid ads in your own website. Thank you. Thank you so much. We are so, so grateful. Thank you, Raymond. That was very, very, very good moderation. Thank you because of making it. And even I know you had to skip class. You told me you had a class today and I told you, you know what, give a cut or give something, but make sure that you are here to moderate this session. Thank you so much, Raymond. And of course, Raymond is the academic director for this program, the Family Business Executive Program at Strathmore Business School. And of course, having him here has made him to know, a lot of questions. You looked at the poll that you are able to run, and you saw that family business training is one of the pain points. And I'm sure this is what we are addressing at Strathmore University Business School. And so grateful for you to having made time to be here. Caro Munene, thank you so much. From the back end, a lot of times people don't know what is happening in the kitchen, but thank you. You've worked tirelessly. You've worked even at night, making this, even meeting the panelists, preparing them, and all the things that you've done at the back. Thank you, Strathmore University, for giving us the enabling environment, giving us permission to run this webinar. We are so grateful to the management of Strathmore University. And of course, my department, I know my team members are here, the Entrepreneurship Center at the university, Strathmore University Business School, the Enterprise Center. Thank you so much for your support. Our marketing and communications team, thank you so much. The backend information, the designs, the promotion of this program and this webinar. Thank you so much. I hope I've not forgotten anybody, but I want now to specifically thank the audience, the participants, our participants from all over Africa. I've even seen some participants from UK. Thank you so much, for choosing Strathmore University Business School as your knowledge partner. And you've been able to stay on for 2 hours. Thank you, our audience. We promise that we are going to share with you these recordings. And of course, in Strathmore, we only don't offer family business program only. We have many other programs that we offer, including the leadership programs, world-class, programs, even academic courses. All those, once I share with you, make sure you respond by saying what else you would want to learn, because we are leading in Africa, and definitely you can get everything, whether you want it customized, whether you want an open program from, a menu that we offer, you will always get something Strathmore University. So thank you so much. I'm so grateful to all of you for staying on. So maybe, Raymond, what we could do is maybe to take a group photo if we are able. I know we are already over 160 right now, but if people can just, put on their videos and we just take a group photo, and I know Caro is able to do that. We shall be happy to remember this day, because this has been a success. And of course, above all, I thank God because of giving you time to be here, making you healthy. If you are not healthy, you wouldn't be here. But you are here because God has given you that good health. And we thank God because COVID is ending and we go back to our normal business, and even having you in Strathmore, coming physically to learn and of course network with each other, even doing many other of our entrepreneurial programs that we are offering at the university. Thank you so much. So Raymond, do you want to
Thank you, Eunice. Yes, I'm not, well, I'm used to the normal Zoom. Caroline probably is able to see the rest of the audience. Caroline, can we take a group photo? Caroline, if you're there.
Yeah, apologies. The group photo will only capture the panelists, okay. Only those who are at the panelist session.
Okay.
But it's still okay.
Yeah.
Since this is a webinar. Yeah.
Okay, fine. Just take then the panelists who will remember this historic moment. Yeah, okay.
Sure.
And thank you to the audience. We can leave at leisure, and I'm sure Eunice and the team, the marketing team behind, will be in touch. And of course, we look forward to you engaging with us. Thank you, IC Lion, for you working with us on this. And also thank you, Ronald, for working with us, and also for the two great panelists, Mr. James and Mr. Popat.
Thank you, everybody, and we look forward to seeing you guys again soon.
Okay, asante.
Thank you very much. See you guys. Thanks a lot.
Bye-bye.
Thank you. Have a good evening.
Bye-bye.